watching famous Dave on YouTube.
Ooh, that's a nice sound. Hello, and welcome back to the Short File Show Live. As usual, I messed up the intro. Another amazing day on the markets with the markets going down and the VIX going down, which is kind of a unique thing. We usually don't see that kind of thing. I brought a buddy on the show today to hang out and chat with us for a little bit. So welcome, Oliver, to the show. You're actually on the show now, so
cool.
You can see you there. Hey, Eagle Investors, there you go. Is that you?
Might be one of my buddies.
Oh, cool.
Yeah.
I was like, I don't know. I'm really bad at doing some of these like on the fly OBS, manipulating stuff, and I realized that like I can't get my face to come up now that I'm on Skype with you. It doesn't pop up in the regular screen, so that's why my face didn't show up on there. But so let's see. E-mini's now down 51, and the VIX is down today. There's got to be some like TVIX people that are frustrated out there. TVIX down 36 with the Dow down almost over 400 points. What do you say to those people, Oliver?
Well, I know it's frustrating. Let's see. Just looking back in time, this is actually the second longest backwardation period since '08 in history. So it's kind of a cool little tidbit. Looking at VVIX, VVIX has actually been falling lately, so I think that's part of the reason. But my little computer program says that we should be nearing a bottom in that, which is totally unreliable since VVIX is just tracking who's buying options premium inside of VIX futures. But it does look like kind of like a consolidation kind of range thing. So I am actually geared towards more longer volatility type plays. So calendars, diagonals, and naked puts. I also have some just general bear calls on like SPY and stuff like that.
Yeah, so that's interesting. We have actually seen the VIX move down a lot. And I was thinking that if we had been down this much today, it would probably pop because it felt really strong at the end of last week. Even when the market was rallying, the VIX felt really strong. So it's really just goes to show once again, we don't know what's going to happen. It just can surprise you almost every day, it seems like. I just have a chart of the VIX up right now in front of us. Let's see if I can. There, now I have you back on there. Hold on, I'm going to get both in the same place. One of these days, I'm going to be able to do all this at the same time.
Yeah, I know that.
There we go. Perfect. Yeah, so I had somebody on this morning from StockTwits who was asking me like, "What's your advice with TVIX?" And I'm kind of gun shy because I came on a couple days. Typically the one time I come on and actually make a recommendation, it like went against. And I came on a couple days ago. There were all these people new to my channel that just were there to talk, because they own TVIX, and I was telling people, well, my usual rule of thumb, which is, don't hold on to it for more than 45 minutes or 48 hours at a time. And so a bunch of people, I think after they watched the show, got rid of their TVIX. Like my official statement was, do something by the end of the day if you're long this stuff. But people sold it, and then, of course, the next day it was up, and I got at least one nasty comment saying like, "Thanks, dude." So it's hard.
Take it with a grain of salt. Most people don't understand that things like TVIX and VVIX, or not VVIX, but UVXY, what they're holding is levered to VIX futures. And then the fact that that's going on, it's more like a game of a twisted financial game of telephone, where one kid tells the other kid something, and then the other kid tells something, and then management takes a cut of the fees, but you end up with either really good news or horrible news. So take it with a grain of salt.
Well, I basically described it to this woman, and it's always questionable when you see a pretty woman's face on StockTwits if it's actually a woman, because women are so rare on there. But now that I say that, she's probably real. But I basically said, like, look, when you buy TVIX, what you're doing is you are buying a certain price level of options in the SPX. And if you're buying it like in the last month when it's over, say, I don't know, 100, you're buying a pretty high level of prices in the SPX. And the higher you bought it, the more the market has to continue to move back and forth to have volatility. That word volatility, the higher you pay for TVIX, the more it has to keep moving all the time to maintain that level, or it's going to go lower. And yesterday, the VIX was down 8 points, and these things weren't down that much because the term structure was so extended. But you can't have too many days of the VIX being down without these products going down. And, they're kind of caught up a little bit today.
Yeah, exactly. I mean, that's how it usually tends to go with when you're in a bear market or whatever. There's usually like a pretty substantial bounce, but that's due to the fact that volatility is the same thing as velocity, both on the upside and downside, kind of like what you said. So it's more along the lines that maybe people don't understand the term volatility and what it means. I think that's a common misconception, because I mean, most of the best bounces happen during when volatility is expanded, because of that same reason.
Well, it's frustrating to me because I have these new viewers, and they come on the channel at a time when they're in trouble, and they need someone to help them out. And I wish I wasn't meeting people for the first time who are very distressed. It's like meeting a homicide detective or something. And I wish I was able to like meet them before they decided to buy a volatility product. But I understand why it would happen, because in a sea of red, you see this product is up $200. You're like, wow, something's up $200. If I buy this, maybe it'll hedge all the stuff that's going against me. And I understand that logic. And it's just that you kind of have to dig a little bit deeper with these products to understand how they actually work. So if I hear you correctly, you sound like you don't buy the level the market's at now, the rally back we've had. You kind of sound like you're fading this rally of the last week or so. Is that the case?
Yeah, that's pretty much the case. I mean, I mainly am in cash right now, like roughly about 60%, but the plays that I do have on are pretty bearish. But it's just more along the lines of like, I'm looking to be bearish, but I want to use tactics that allow me to use time to my advantage, like calendars or diagonals or just general spreads. I mean, it's just more along the lines of like, I just feel like it's more of a waiting game, because the tape is definitely probably going to get worse from here, but it's just a matter of how long is it going to take to get to where we're going. But when it does turn around, I will buy with both hands.
Well, somebody named Bose Ganta says hello in the chat. Can you see the chat in front of you at all? I don't know if you have that screen up. Okay. Someone named Bose Ganta says, "Hey, Ollie."
Hey.
Yeah. So, yeah, I don't know. I haven't. I don't really have an opinion on stuff, and I haven't really been thinking that like, well, it's in my mind, it's gonna go lower from here necessarily. I'm kind of equally fearful on each direction right now at the moment. Just kind of while I have you on here and a new face to this channel, maybe if you could just describe to people kind of what kind of trader you are. And by that I mean like how many trades do you do a day, a week? How long do your trades usually last for? And then we'll get to some questions in the chat. But if you could just kind of describe yourself as how your trading activities like unfold personally.
Sure. Okay. So what I typically do is I use the term structure, kind of like an on-off switch. when to be long beta and when to be short beta. So essentially, since 80% of the flow that comes through SPX goes into the market, usually it's translated through how things are weighted via beta. So right now, since we're in backwardation, I'm more geared towards being short beta. So right now, I think I have about maybe like 15 to 20 positions on right now, but it's more of just like, going after the high flyers, either doing calendars or looking for things that don't make sense. For instance, I'd say EWZ, that's the Brazilian ETF. Currently, right now, inside of Brazil, the situation is getting ready to go from bad to worse, mainly due to political gambling, I would call it, by their president. Essentially just telling the workers to go back to work and avoid the social distancing rules that have been set in place both by the CDC and I guess the WHO. So I guess my goal is to mainly look for things that don't make sense during times of high correlation. And since we're in high volatility, things tend to correlate very highly, both to the upside and downside. So in general, aside from that, I would say I rely on a lot of like economic data or fundamentals. Yeah, for the most part. Yeah.
So we have a question from the chat. Let's see. So let's just go down these. How are you feeling on oil going sub 20 and hurting the market? It says, actually, the question says, how are you feeling on oil going sub 20 and hurting the market, maybe, with a question mark? You want to try to tackle that one on oil?
Sure. Yeah, okay. So oil going sub 20 is going to hurt the market. It's first going to attach itself to junk debt. Right now, the Fed, they can intervene in some markets, but they can't intervene in the junk debt market. They can intervene into investment grade, I believe, but that's as far as they can go without getting a new mandate from Congress. So after junk debt goes down, that's going to affect other forms of credit. It's just kind of like a cascading effect. But that's basically how it affects the entire market. Oil in general is considered like the lifeblood of the global economy. So whatever happens to oil, it's another risk on, risk off sentiment type things. So right now it's definitely pointing to more bearish downside. And I did see that the US and Russia are in talks, but Russia is typically a pretty bad actor, and we do have some sanctions on them. So my guess is that they're going to use this point in time as leverage to get those sanctions taken off, or they're going to twist the screws.
It sounds like you've got some fans locally as well as online. So, yeah, I mean, it's shocking the oil's down below $20 a barrel. It seems like it couldn't stay there, but maybe it will. So this whole oil thing kind of got started with the Saudis and Russia squabbling, and it can't be helping Russia. It's kind of, I worry about Russia getting too destabilized, and maybe Putin loses power, and maybe that's a worse situation than him being in power, from destability. All right, so I'm going to continue with the questions here. Let's see. Do you think we are in a bull market?
No. No, I don't think we're in a bull market. I think this is more
a bear market. Do you think we're in a bear market? I wrote it down wrong.
Yeah, it's just more along the lines of like there's a lot of bad that's going on out there. There's some good things, but I think the main thing that's concerning is the psychology that's coming into play. And by that I mean typically in deflationary cycles, it's going to change the way that we consume things, the way we buy things and transact and communicate with each other in general. I mean, think about it. I mean, yeah, we're getting a couple $100 from the government or whatever, but we can't really leave the house. Yeah, we have cheap oil that we can't drive around. I mean, the oil situation on its own is very concerning, because it was actually happening prior to the COVID situation happening. So it's kind of like, you need a spark to start a fire, kind of thing. So
So, I know we were talking before before we started the show here that both of us are kind of isolated with our families, and I know people are facing that around the world. And I've always just thought it's going to come down to like kind of how long this lasts for, this whole situation. And nobody really knows. It seems like does it come back around to the first wave of countries that got hit? Those are unknowns that are out there. I don't think that I'm not convinced that the market has to like necessarily go like make new lows. I don't know. Did you watch Theo trade at all? He did something about the junk bond market yesterday, which was sort of interesting. I
didn't watch it.
Okay,
I'm sorry.
It just sort of talked about how the junk bond market, as you had said, the government can't intervene with that, so it's more of like a real indicator of what's going on. And it had bounced a lot in the last day or two, and they were talking about shorting the junk bond market, thinking it's going to go back lower again. And it seems like so it seems like your sentiment is that we're not out of the woods here, and things can definitely go lower. Let's see. There's a ton of questions here. Let me see if I can just kind of parse through a little bit of this stuff.
Now, I was going to say, hey Dave, if you want to see the Fed act real time, all you have to do is watch the 3-month Treasury. So you know how we're all getting checks or whatever, and blah blah blah, helicopter money. Most of that's going to be absorbed by the Fed. Okay, so what we're going to see is them selling the 3-month Treasury, because that's the Fed funds rate, and then they're going to be buying different parts of the curve because they're trying to flatten it out. The last time they did this is like World War II, but just saying, like, for instance, that's how you can see them acting real time. I've pointed that out to my people a few times, and it's pretty cool to see.
That's interesting. Yeah,
the overall effect it'll dampen Treasury volatility.
When you say that, it reminds me. I spent I think something around a year and a half, 2 years trading in the pits of the treasuries in the Chicago Board of Trade. I was in the 10-year for a while clerking for somebody, and the 10-year is a really crazy pit. It's not super big, but it flies really fast. People are moving really fast, but you can see like the other pits, and I think there's like the 5 is over on one side and the 30 is over here. And when I was in there, I didn't really understand very much about the yield curve and whatnot, and it just reminds me of that whole thing when you talk about that with the Fed, because the bond floor is all about these auctions. When's the next auction? How did it go over? That sort of thing is like such a big deal with them. All right, so let's see. We've got more questions here for you. Let's see.
Sure.
I don't really want to answer like purely political questions here because I try to shy away from this.
Yeah.
Is the Fed buying up ETFs? I think they said they were, right?
Well, you can, for some dealers, you're able to use it as collateral. So if you need extra funding or whatever, you can use it as collateral. They don't just blatantly just buy it. You have to put it up as collateral, and then they'll give you money in exchange. I mean, I guess in a way it is buying it, but you can't necessarily say that.
I was thinking they were actually going in and like without telling anybody, like actually accumulating equity in buying shares of ETFs somehow. I don't know.
I don't think so, but I'm fairly certain that they would have to people that need like liquidity or whatever, they would put it up as collateral. but they'd have to go through like the repo or something like that.
Okay, so then I have a question from one of our members, and I'll answer another one here just really quick. I have Oliver's. I will post his links in the description. Are you on Twitter, Oliver?
Twitter? No, I'm not on Twitter. I'm on StockTwits. I'm also a lead trader at Eagle Investors. My StockTwits name is the Dumpster Diver.
Yeah, I'll put that in too. And there's links in the description to, of course, to his website. So, and notice people in the chat. I'm going to the person who bought a memberships question first. Hint. No, I'm just kidding. The Apex, Spencer says the Apex is in 2 to 3 weeks. Social distancing extended to April 30th. Social distancing will totally be extended again. I'm inclined to think this is a dead cat bounce. Opinions. Do you want me to go first, or you want to go first? I'll go first. How about that?
Take it away. Yeah.
For me, a dead cat bounce means like something goes down and then it doesn't come back up again. The market rallying way up and then fading down. That doesn't meet the definition of a dead cat bounce to me. But regardless, whatever it was intended, as I've said, I'm not taking an opinion on this either way, and I think a lot of people have a foregone conclusion that I will. I'll put login ask. I'll put in the chat his login for StockTwits in just a second. Yeah, I'm not inclined really to make a prediction as to which way we're going to go down. I think a lot of people are fading this market, but I get, so many people are fading it that I almost feel like I'm going to be the person that doesn't fade it. So I'm staying kind of neutral to which way it's going to go. I don't really actually think all that much about which way the major indices are going to go, unless it's like, during a huge crash or something. But it seems like the person in the street is saying, oh, this market's definitely going lower. This rally is definitely fake, and it's definitely going to go down from here. And when you hear that at the gas station from non-traders, it starts to make me think for a second. How does everybody in the public know what's going to happen? It's kind of like when you go to the gas station and someone says, "Oh, well, oil's going higher this year," because they heard it. So I'm taking the contrarian view that everybody thinks this market is not for real up here and is going to go lower. So, it seemed that over this weekend, for example, if you polled people over the weekend, everybody thought this market was going to open lower on Monday because there was all this bad news, and it rallied. So I give up. I'm not going to try to predict it anymore. But I'm sure your opinion is different than mine, so go ahead, Oliver.
I mean, it really depends. This is a hard game to play. Before this week, we didn't have to contend with the printing press going full tilt. So now I will say, like, the easy money was made, like on the downturn or whatever. But there will be more opportunities. I mean, that's the good thing about higher volatility means, higher ranges. So you just have to be picky and choosy about what things you're going to go after and in general. I mean, I hope they are able to extend the curve because that means, I guess, things won't be as bad. The main thing about extending the curve is just making sure that the healthcare workers aren't overwhelmed and more people, die accidentally because of not getting the right treatment than if things are extended out further in time. I know that sounds sucky because that means we are going to be spending a lot more time dealing with this issue, but the longer we deal with this issue, the less it will impact the majority of people. So it's kind of a double-headed sword, I'd say. Aside from that, I mean, the main reason why I've been kind of tackling and scratching my head about this market is some of the economic data that we've gotten out of China. Like last night we got a PMI data, which is like one of the big survey data that usually comes out globally and kind of tells, are you in contraction or expansion? And they had a significant turnaround, but they're known for not telling the truth on their numbers. So I'm just kind of like, how dumb do they think the market is? I guess kind of in a way. Like it went from I think 35 all the way to 52. So it's kind of like a ridiculous, nonsensical kind of numbers. Like I can't buy that at all. But aside from that, I mean, the main thing that I'm having a hard time deciding on whether I should be bullish or bearish is having to deal with the amount that is getting ready to go onto the Fed's balance sheet. That's basically the ultimate decider for me.
It kind of seems like, this is just hastening the end of like the United States as a global superpower when they just print more and more and more money and go into more and more and more debt. It's not a real good feeling. Did you hear? I heard this rumor from somebody today. I don't know if you heard this one, that China has like 200,000 cell phones that like they don't know where the people are. Like there's a bunch of cell phones that like basically the rumor is that like that there's 200,000 extra like dead people from this crisis, and because there's these cell phones that have no people left associated with them or something like that. I know it's just a rumor, but I was hearing that one today from one of my conspiracy friends. Did you hear that one
too? And like there's a bunch of urns that are unclaimed, and the smog over Wuhan was just the factories coming back online, and that's just a bad joke. But I've heard a lot of things, but there's a lot of things that you don't know. But there, a lot of things that we will never know as far as what comes from China in that area.
So okay, so here's a question.
I know that's not very.
Here's another one. What causes the VIX and TVIX to unusually follow the direction of the SPY like it did today? I'll take a stab at that one first. And so the VIX and TVIX, first of all, are two completely different things. And the VIX, it's not based on the direction of the SPY or the SPX. It's based on the price level of the options in the SPX. And generally speaking, when the market rallies, price levels come lower. There's two reasons for that. One, when the market's rallying, people are not buying puts for protection because they're not worried about the downside. And two, the SPX is based on a skew where like as you move upwards in strikes, the volatility levels are lower. So if it's marching upward, you're actually moving up to a spot where the skew is lower and your average price is lower. So in general, the VIX goes up when these go down, but it doesn't have to. And we're in a weird place with the term structure, with it all extended, and there's just a lot of pressure right now on vol to go down. I would say the biggest reason that the VIX is down with the market down today is just because the market has not been moving around very much. We haven't seen this week any limit up or down days. And I know that shouldn't be surprising in a normal market, but we had weeks where it was like every day is up and down limit. We haven't seen the market has noticeably calmed down from where it was 2 weeks ago. And that calming down means that the VIX comes off these historical high levels and starts to move lower. Remember, in most times, a VIX where it is now would only last less than 24 hours. For us, it's been up high, but we are, we are in an extreme high level of volatility, and it takes a continuing extreme level of market movement to keep us up here. So, the VIX is not at an average height. It's very high right now, and the surprising thing should be that it stayed up high this long, not that it's falling, in my point of view. Do you think does that make sense to you, Oliver?
Yeah, no, that makes sense. I mean, like I said before, this is the second longest backwardation since 2008. I don't know, just some of these levels we just have never experienced before. So, I mean, typically, I guess one of the main confidence factors was the Fed going into this. Typically, they have about 5 basis points of cutting power. And this time around, they only had about maybe 1.75 basis points. So I know that alone would be a big confidence shock to a lot of people. Like, oh no, are they going to be able to save us or not? And then it appears they can just do whatever they want. Banana Republic style.
Yeah, don't get me started on the Fed. I was very much opposed to them. And the problem, it's very difficult to talk about this stuff because without getting into politics, because you talk about the Fed, you're getting very close to talking about politics, because although it's an independent office, it is appointed by, you know, the president, who is the head of a political party. So you're going to get people, unfortunately, who either love the Fed or hate the Fed based on which tribe they're playing for politically. And that's unfortunate, because I'd like to just have a conversation about talking about the Fed based on like the merits of the decisions they've had. But anytime you get into kind of a conversation with people, they're going to bring their politics into it, and they're going to either say they're either going to parrot what their favorite politician says about the Fed, or they're going to parrot policy talking points. So it's a tough topic for me to really delve into here, because I try so hard to stay out of the politics stuff. And it's a hard job for the guy too. I mean, especially in this.
Yeah, I agree. I mean, I'm just kind of disappointed with Powell. Like, just looking at his track record, the thing that put him on the map was 2011. Back in 2011 was the first time we had a. Oh yeah. But I'm not sure if you caught that last bit. So 2011, that's what put Powell on the map. And that's kind of like why I'm a little disappointed, because during that time, he was speaking out against the debt default that happened inside the United States as the first one in maybe about a century. And, you know, he kind of seemed like a champion of debt. And now, in my eyes, he's more of like the great enabler of debt. So I don't know. I guess that's why I'm disappointed mainly.
I mean, the turning point for me was like when he the economy was doing fine. He raised rates once, and then the president was highly critical of him, and within like 2 months they reversed course and they decided not to raise rates anymore. It was predicted they were going to raise rates like 3 times or something, but you know, the president jumped all over him, and he like just caved, and then he started cutting rates. And, you know, we're using up all the bullets we have for when things are bad, and pretty soon, you know, all the bullets are gone when something bad happens. But you know, for me saying that at the time, if I said that at the time, people jumped all over me. People who had never followed the Fed, I'm pretty sure they didn't even know who the Fed was until the president had mentioned the Fed's name, were you know, talking as if they're Fed experts, parroting what the president had said. And it's frustrating, because I would have been upset with the Fed for not raising rates if he was you know, under a Democrat president. It's just, you know, it's just not a policy that I'm for, regardless of your politics. But I'm positive some of the people that are arguing with me would have taken the other side of that argument if you know, if their party had told them to, which is really frustrating. Sorry.
Yeah. No,
I'm not going to be political. If somebody's saying on there that I'm being political. Okay, so any stock picks out there? Anything you like in this environment?
Stock picks? I like Occidental Petroleum. I like. Do you what?
Blue Horseshoe likes Occidental. This is a Wall Street
Blue
joke.
Horseshoe? I don't know. DocuSign, that's a pretty good one. It's been pretty resilient. Let's see. Still pretty bearish in Brazil, so I wouldn't suggest this one, but it's called Meli, M-E-L-I. But when things turn around after this virus thing, I think they'll do pretty good. Let's see. Lucan Coffee, Chinese name, when things turn around. I mean, there's a few different things that look pretty good, but I don't feel that we're at the turning point just yet. Like right now, with Occidental and Exxon and things like that, I've got some cash secured puts out there, kind of just trying to, bide my time, but enter into a position over time, but not necessarily, just buy immediately. I want to get paid for my time.
How did you fare on the? Have you fared okay in this market? Was it because for me it was very tough. The first couple weeks of this down move were very tough because I was short VIX products, basically the whole way up. I wasn't short a lot, but you didn't need to be short a lot to kind of get crushed. But then I was smart in that I did kind of buy the bottom a little bit. I did buy some stocks in the market when we were way down. Has this been a good trading environment for you? Has it been bad, or has it been just, or have you been sort of on the sidelines?
Dude, okay, so the shotgun approach that I mentioned, as far as when VIX is in backwardation, just going short, long beta stocks, that has been very well, very, very, very well. So, but now since things are starting to level off, it's kind of deflating and not going as well as I would hope. But I mean, I've got most of my plays are out till like April 17th or so. So I mean, I'm not too concerned because the majority of the positions, it's more along the lines of like options have an embedded stop loss put into them. Okay, you can only lose as much as you put in, and you can vary up the different strategies that you do. So I think longer term things will be fine, and if need be, I can just adjust my strategies depending on what the VIX does. That's my main go-to. Is I look for what are the leaders, what are the laggers, and then how can I take advantage of it based upon what's happening inside of VIX. So, I mean, I don't particularly trade VIX as much lately, mainly because my usual strategy was just being a gunslinger and just buying puts on VIX. But, man, I guess aside from that, I could just sell premium or buy spreads or something like that. It's just an opportunity cost, I guess. And I'm kind of not the most patient person when it comes to opportunity cost.
Yeah,
that's my downfall.
I mean, we're coming into earnings now, and there's some stuff to do out there. I was looking at some possibly putting some calendar spreads on into RH yesterday, actually. But I just didn't like the level so much. The thing is like, I have this idea of maybe selling some premium in these stocks, and then you just look at the chart and you're like, oh my God, this chart is crazy, and you're like, I don't really want to sell anything in there. You're like, I was looking at Wayfair,
right?
Wayfair, and which I have the chart up on here now, and it went from, let's see, October it was 120. It got to $21, and then it rallied back to 62, and then went back down to like 45, and now it's back to 53. And I was thinking, maybe I'll sell some puts. I'm like, it could easily go back to 30 tomorrow. It's like the volatility is high in options prices, but it's justified right now, it seems like, because stuff's just whipping all over the place. The other one I was looking at today was Carnival Cruises. I mean, I came in this morning. Carnival Cruises was offered. It was like down $3 or something, which was like, it was like down like 30% or something before the open. And I looked at it after the close, and it was up on the day. It's up 37 cents on the day. It's Carnival now trading 13. But yeah, it's crazy out there. And I think the best advice for people is just to stay small. If you want to play, I'm not here to stop you, but I would stay small because you don't want to like just give up 10, 15%. It's very easy out there right now to give up 10, 15% of your account if you let them. If you expose that much of your account, it's very easy to give it away, it seems like. So it's I I was talking to my buddy Droz. I don't know if you guys know him, Andros. His name is Andros on StockTwits. And yeah, he said that like a lot of the chat rooms are empty on StockTwits right now. So I gotta think a lot of like smaller retail guys have lost their shirts, and it's not surprising because most people are long the stock market most of the time, and we're down. You know, a lot of people who are new traders, they get in and they buy a stock and it goes up, and it's like that's great. But when it doesn't go up, they lose their shirts, and I'm afraid a lot of retail has gotten killed right now. So the best advice I think for people is just to stay small, like make it through this, you know. And for me, I'm the same as you. I've got cash on the sideline, and I feel perfectly comfortable just having the cash there and not playing. I don't need to be in there doing something every day. You know what I mean? It's scary out there.
Right. I mean, you could easily lose your head if you do the wrong thing. And not only that, I mean, having the printing press in play is definitely adding a lot of confusion. Like somebody mentioned both stocks, bonds, and the VIX selling off all at the same time. It's like, what do you do? I mean, sometimes the best play is to not play at all.
Yeah, totally.
Yeah.
Is it possible? It just doesn't seem like oil can stay this low for very long. I mean, I guess it can, but it didn't seem conceivable to me it could actually go below $20 a barrel. But
well, it's a storage issue. It's supply, demand, and then storage. Yeah, because right now physical storage is actually getting pretty top heavy, and I'm not sure if I know you mentioned the CARES Act or whatever. And you were talking about that, but that was one of the things that they left off. They're supposed to top off the national storage or whatever. They never did that, so.
Yeah, because remember the president was saying that? Like, remember that day that, like, right on the close, it rallied like 1,000,000 points when the president was, like, brought all those corporate leaders up, and he's like, this guy's doing that, and then the next day it was right back down. He said during that speech that, like, they were going to be buying. He's like, this is a good time to be buying oil. We're going to buy a bunch of oil, you know, and that seemed to make sense to me.
No.
But, well,
no, decided that's not going to go. I mean, I guess that's part of the deal of compromising.
Now, does he have to get Congress to approve him to do that, or can they just like quietly buy oil? I don't know how that works, actually. I'm not sure.
I think in that situation he did have to have Congress because it was part of the CARES Act that he wanted to get passed, but I think part of the negotiations that happened, it fell apart, which is kind of, you know, because the reason why he mentioned that is just kind of like, say hey to the base, because I mean that wouldn't really put a whole big of a dent on what's about to happen, because come end of March, well, I guess end of now till April, and I guess the next OPEC meeting won't be until June, but this is where the Saudis and the Russians are gonna slug it out like Rocky Balboa style.
See, I always thought that I don't know.
Go ahead.
I always thought that the U.S. we don't really need the Saudis as much anymore since we did all that fracking and stuff in the Dakotas. Like, I thought that over the last couple of years we've become really independent of all these people and we don't really need them anymore. So it seems like this whole oil thing is going to hurt foreign countries more than it hurts the U.S. in a way. And I understand that investment is based around oil and that companies can't meet their obligations because oil prices are low and all that, but it seems like it would help us that we're independent of these people by finding all that oil with fracking. Remember, in the early 80s, they were saying we only have 15 years left until all the oil in the world runs out and all that, and oil got up to 160 a barrel or something, and now it's totally flipped around. I don't know. I know that it's bad that oil's that low, but I just can't imagine it staying down that low. It seems like to me it's going to bounce at some point back to at least 30. I don't know. I guess we'll have to wait and see.
I mean, that comes down to understanding that term structure, which is a little bit different from the one that we deal with. Right now, it's actually in a very steep contango. So basically, the incentive is to just not touch it at all, or leave it in storage. So a lot of people, like, they'll have offshore storage, or they'll go to Cushing, Oklahoma. That's a big storage spot. But yeah, no, the demand picture has already been waning, and then with the COVID thing going on right now, that's also hitting the demand part. So basically, since we decided that we're going to be a net exporter of oil, and our break-evens are maybe about $40 to $50, being at $20 oil, it's not such a great feeling.
That's Somebody in chat. Somebody in chat saying the cost per barrel for extraction, Faharbadar. So if I butchered your name, the cost per barrel extraction is cheapest in the Middle East. Those wells need to dry up before moving locally for extraction. That makes sense to me. And Mac 7 Radio says there's still a large dependency on selling oil in the U.S. economy. And
right.
yeah, that's got to be true. Yeah, that's true.
Right.
Also for Russia, right? And for the Saudi. I mean, so I guess the
Yeah,
Saudis
but,
got to decrease production at some point, right? That would help.
if they want to. I mean, this is a all right, I'm going to use a very blunt term. This is a geopolitical pissing match.
Yeah.
So they're going at it. I mean, once the end of this month happens, they're going to go at it, and it's not going to be pretty for most people that aren't in the particular break-even range, which this is the same thing that happened in 2014, and Russia did the same exact thing. They're the notorious bad actor as far as they're not going to play by the rules, and they're going to cut corners and not comply, and they're going to stick it to everybody. But yeah, so most of the U.S., their break-evens are around between 40 to 50-ish a barrel. Occidental is one of the ones that I like, but it's got a crappy balance sheet, but its break-even, because it bought Endarco, is roughly a little over 30 a barrel, which is, I think it's going to be a buyout opportunity later down the road, or it needs like active management to come in and just sweep the floor. But in general, no. Oil is the lifeblood of the global economy. So whatever happens to oil, this is saying big things, especially when those storage things top off. It's like, what are we going to do with all that remaining supply?
Yeah, it's also just general price deflation, I guess. It brings to mind. It just brings to mind general price deflation all over the boards. All right, well, I guess we all just have to maintain our optimism. We're all stuck here at home right now, twiddling our thumbs. I was talking to my one buddy. His wife is actually one of the few people that's in like a job where she's getting like double and triple pay right now. So a couple people are cleaning up, and everybody else is sitting at home twiddling their thumbs. It seems like.
Nice.
Any thoughts on BP? Someone says. I don't. British Petroleum. I don't follow it myself very much.
I've never looked at BP in a long time. Yeah, I haven't looked at them in a long time, but.
Let's see. 24. It's 24. Got down to 15. Yeah. Had positive earnings. Mm-hmm. I don't know anything about it. I don't just want to talk out my, waste people's time.
Keister.
Something like that.
I don't know much about BP.
So just for an update, once again, for people, while I have your attention here, I don't know if everybody knows this, but 401ks now, you can cash in your 401k if you really want to. And I don't necessarily advise it, but if you're hurting for cash, now the 401k companies, I know Fidelity hasn't set it up yet. It's not, the stuff isn't in place because they just came out with it last weekend. But you can borrow up to 100% against your 401k now, and without any penalties if you're allowed to pay it back within 3 years and have zero penalties. You can borrow it and you actually pay yourself interest to put it back. If you don't put it back within 3 years, then you have to pay the taxes on any capital gains tax you may have. But the 10% usual penalty that you pay if you're younger than 59 and a half has been waived. And so I think this is important for the markets, because once the general public realizes that they can cash in their 401ks, we might see another wave of selling, because there's a lot of people who don't have any money, who are, I guess the people that are living to check might not even have 401ks, but if they do, they're going to, once they find they can access their 401k, they're going to take the money out, and that means they're going to be selling stock. So you think that's going to have another wave effect on this, or you think that's negligible?
I think it actually might be negligible. I mean, I think more people are going to start seeing that there's more opportunity if they, stay in longer term, or better yet, maybe leverage their 401k. This is one part that I noticed of the CARES Act. I'm not sure if this got put in, but what they're planning on doing with student debt, I think that might actually be a very good thing for real estate, to be honest. The main reason I say that is because the main thing that is holding a lot of people back from the millennial generation is debt to income ratios. So if this is going to be one of those things that actually equalizes things, and it might actually be a positive for things like real estate and asset ownership longer term.
As far as I understand it, as far as student debt goes, I think they just delay it. Here, I have the student loans. The CARES Act offers multiple benefits for your student loans. Through September 30th, you don't have to pay anything. And you don't have interest on payments. They won't garnish your wages. So as far as I understand it, the only thing that happens to student loans is that there's just you just get a period where you don't have to pay it back. That you're not.
Okay,
that you're
maybe
not taxed
that's
on.
the rumor that I heard about. Maybe I know that this is going to be the first of many waves of stimulus plans that they're going to need to do. Well, that's just my opinion, but I think that at some point that's going to be something that they're going to have to address. Like I've heard the idea floating across of $10,000 or $30,000 being waived off student debt. I don't know if that's true or not.
It says
but if
here,
that were, that would be interesting.
It says here, I think that the Democrats were pushing for that, but I don't think it went through.
Right.
Because it says here, does the CARES Act provide for student loan forgiveness? Senate Democrats proposed a student loan forgiveness plan that would forgive at least $10,000 of student loans, which is what we were hearing about in the press, but I don't think it made it in.
Okay.
They proposed that every borrower receive $30,000 of student loan forgiveness. Despite these efforts, the CARES Act does not provide for student loan forgiveness, so that didn't get in. As you know, it's a very long document, and we'll be able to get more into it as time goes by. But I think that it is important that people know that if they need to, they can get out of their some of their 401k. We don't advise it because that's for your retirement. Neil Prince in the chat, what you're writing there is what I believe is the terms of it. That the penalty is waived, but you are going to have to pay capital gains on that, because remember, on most 401ks, unless it's a Roth, you didn't pay taxes on the money when it went in. So when it comes out, you do have to pay taxes on that. However, this plan, you can under the CARES Act, you can stretch those tax payments over the next 3 years. In fact, you can pay it all in the third year if you want to. So kicking the can down the road. It's not forgiving it, but it's not, it's kicking the can down the road. But I think it is a good source of cash. If you're desperate for money and you've got this huge 401k, I mean, I was considering having to quit my job so I could get my 401k, because my 401k was my biggest source of assets, So for some people, it's going to be a helpful thing that was allowed. All right. Well, I'm kind of going long. I think we should wrap it up in a couple minutes here.
Okay.
How about talking just a little bit about about that program I was on the other day, and about the website and the things that your group offers people.
Okay, so my group is called Eagle Investors. We're a community of stock traders, options traders, futures, and cryptocurrencies. It's a Discord server, so it's kind of the same fashion as you may consider and seen before. So what happens is we put out a daily watch list of stocks that we're watching, or currencies that we're watching, or things of that nature. And then during the day, real time, we'll usually put out alerts, or we'll put out notes of what we think is happening during the market and why things are happening the way they are. We have about a team of, well, we have a team of different traders that put out different alerts. Some specialize in like the macro theme, kind of like that I do, or they do earnings related stuff. One of the persons that Dave's planning on having next time around, Sean.
He's
no,
really cool.
It's a tight wound group of traders that are all really chill and laid back, and we're all just trying to work together to all become more profitable in the end.
I tell you what impressed me just is that, and it kind of impresses me with the people that are watching this chat too, or this channel too, is that like I see people that like really have a passion to try to like learn this stuff and figure it out, and it's not always easy to find, to try to where do you go to learn about the markets and figure it out. And I was impressed when I came on your live stream that there's people there who obviously are taking this serious and want to learn this stuff and are determined to figure it out. If you're laying down money every month to be in a group and to learn from people, you're taking this stuff seriously. And for me, when I started trading, I certainly had that energy. I moved to Chicago, which I'd never been to before, not knowing anybody, and was determined. I started as a runner for $300 a week. And I was determined. I'm like, I'm going to be a trader. And if people told me like, well, we don't want to hire you or something, I was like, fine, I'll find somebody else. And somebody's going to hire me, and I'm going to figure this out, and I'm going to make money, and that's going to be what I'm doing. And when I saw people in that group, I could feel that fire there. And it's impressive to me that you've got people that are new to this game, but they're excited about it, and they're like, they're like a sponges absorbing this information and like trying to get as much knowledge as they can under their belt. And that's a really one exciting thing for me about teaching people about the market. And when I was looking on that, when I was on that show with you for the group, I could feel that amongst the people there. So it's exciting when people are actually putting out some money to be in a spot and to learn about stuff. They focus in and they take it seriously, and you could feel that energy really in that group. So I was impressed. I was also impressed with your coworker there. He's an impressive guy, certainly.
Yeah, I mean, just in general, kind of like you said, our main goal is to first and foremost just educate. I mean, yeah, we put out plays and stuff like that, but we want people that can think for themselves.
Right.
That can, sort of checks and balances and bounce ideas back and forth with and collaborate with, and just in general, just become overall, just if we work together, we can do a lot more rather than just people just mindlessly following what we do. Whether it's technique or what's going on in the market or whatever, that's our main goal, is just making sure that everybody knows what is happening and how can they take advantage of it.
I was talking on the show yesterday about figuring out what the theme is developing each day. It is helpful to have other people around you when you're trading, and not just because sometimes you feel like you're all alone out there, and that there's a lot of different things you could do with your money, and you don't know. Having someone to just talk over an idea with before you execute it can be vastly reassuring at times, especially when it's something that's kind of new to you.
Yeah, and I mean, accidents do happen and people do mess up, but it's just more along the lines of you got to make sure that you have the right mindset going forward. Don't regret what's happening or what happened. Figure out what you can do and how you can recover and how you can get back up. But don't dwell on it. And it's just, keeping the positive momentum going.
Yeah, that can be hard. That can be hard, definitely.
Yeah.
All right. Well, listen. Thanks, Oliver, for joining me. And come back anytime. We're here pretty much once or twice a day now with this market, and everybody's at home, so might as well. I like coming in on Sunday nights and just having a little strategy session before we go into the weekdays, and also people check out StockTwits. If you're not on StockTwits, it's a great resource. People people squabble like crazy on there at times, but I think StockTwits is great because you can go on a certain thread that's just focused on one particular stock. So if you have a stock you like, you can go there, and there's going to be these super cheerleaders for that stock that know everything about every earnings, and like they've been to the factory and they know everything about it, and they're super into it. And you can have like all the bulls against all the bears, and you can heckle people like over a period of months, weeks, and years, which is definitely a fun thing to do. That's where you and I met, and I think it's a cool spot. I mean, definitely.
You definitely see both the best and worst and in people, and the hilariousness of just people just jabbing back and forth. I always enjoy StockTwits.
Totally.
It's kind of like if you've ever gone onto Reddit, that group's Wall Street Bets. They just have some ridiculous memes on there.
Or
they're definitely fun.
Those screenshots of people losing like $5 million on. What was that? Did you see that one a couple weeks ago where someone bought like $700,000 of like Tesla calls or something? Did you see that one? It's like, what are you doing?
No.
He bought like 65 like calls that were each worth $65 or something crazy like that, and Tesla had gone down like $400 or something. So I think he paid like $65 for them, and they were worth 14 or something. It was just crazy. I don't know if all that stuff's true, but it can be hilarious. All right, well, listen, everybody. Thanks for coming on, Oliver. Check out the site, and we'll see you again soon. I'll probably see you on StockTwits tomorrow morning.
All right. All right, sounds good.
All right, thanks for coming on, and thank you, folks, for joining us. And we will see you next time on the Short Vol Show live here on YouTube. Pick up a membership. It's $1.99.
You're watching
Thanks.
Famous.